Welcome to part one of our deep dive into the semiconductor industry, a billion-dollar sector that's beyond the hype. Recently, leading semiconductor stocks have been volatile, with companies like Micron Technology reporting strong earnings, yet seeing their stock prices drop. Why is that happening? Let's explore. It seems like everyone, including your neighbor's dog, is talking about semiconductors these days, but do they really understand this complex and crucial industry? Today we'll break it down for you. What do artificial intelligence, automation, the metaverse, fintech, and electric vehicles all have in common? They all rely on tiny components made of silicon known as microchips or integrated circuits. Pretty much every major growth industry relies on microchips. They're not just about AI. The semiconductor industry is massive and intricate. Let's dive into why this sector is so crucial for investors and our modern economy. First, semiconductors are fundamental to long-term secular trends, meaning successful investments here can grow for decades. Second, designing and manufacturing chips is incredibly challenging, allowing companies like NVIDIA, TSMC, and ASML to build strong market positions. Lastly, the industry's cyclical nature offers opportunities to invest as attractive valuations. Let's start with a quick primer on the semiconductor industry. Silicon's conductive properties make it essential for various applications, including solar panels and display screens. But when we talk about semiconductors, we usually mean microchips. A microchip, or integrated circuit, or IC, is composed of transistors, resistors, capacitors, and other components etched into silicon. These components allow chips to store and process data in multiple ways. Chips are generally divided into three groups: memory chips, logic chips, and analog chips. Memory chips store data, like the chip in a USB drive. Logic chips process data, such as CPUs and GPUs. Analog chips control power and convert signals like sound and temperature into digital data. Some chips perform just one function, but many are combined for specific tasks. For instance, microcontrollers control electronic devices, while CPUs perform various tasks sequentially. GPUs handle multiple tasks simultaneously, ideal for graphics processing. Chips are manufactured in facilities known as fabs. This process is complex and costly, leading many companies to outsource production. These fabless companies focus on design and marketing, while a few, like TSMC, dominate the fabrication side. Now, let's focus on the memory chip market, a critical and competitive segment. Companies like Samsung, SK Hynix, and Micron Technology dominate this market. Memory chips are essential for storing the vast amounts of data generated daily. NAND flash memory is non-volatile, meaning it retains data without power. This type is found in USB drives and mobile phones. DRAM memory, on the other hand, is faster but needs power to retain data, making it ideal for data processing. The memory chip market is highly cyclical. Prices and volumes fluctuate based on supply and demand, with prices generally falling over time while volumes increase. Understanding the cycle is very crucial for savvy investors. Investments in research and development (R&D) and capital expenditure (CapEx) significantly impact earnings and cash flow. Companies must continuously innovate to stay competitive, leading to high R&D and CapEx spending. So there you have it, a comprehensive introduction to the semiconductor industry and the memory chip market. In part 2, we'll delve deeper into the major players and trends shaping this fascinating sector. So please stay tuned. Thanks for watching. Don't forget to like, share, and subscribe for more insights into the world of finance and more financial education content. We'll see you in the next one.